Hi, Ron Benning, broker. I'm back with my monthly duplex market update for the greater Sacramento area. Accurately predicting a real estate market is very difficult because there are many unpredictable variables. The best that any of us can do is to look at as many relevant data points as possible to see the developing trends and try to spot correlations between these various trends. Having said this, market changes leave evidence. What I'm going to do is look at some of the developing trends in the Sacramento duplex market. We've all heard the term smart money. Smart money investors are always aware of the micro and macro market conditions. My main focus in this update is to study the micro, which is the local supply and demand trends. I will touch very briefly on how some of the macro conditions, primarily interest rates, inflation, and job numbers, may also be influencing our local market. By keeping in touch with the developing market trends, a savvy investor can make moves into and out of markets before the street, the less informed investors, make moves. So let's take a look at how our local market trends for duplexes in the greater Sacramento area. If you want to keep up on the Sacramento duplex market, please subscribe to my channel down below. It has been a seller's market for most months over the past several years. Currently, we're in a neutral market for duplexes. We ended the month of January with 4.1 months of supply of inventory. A neutral market is a market where we have between 3 and 6 months of supply of inventory. It is important to understand that despite the sellers having a little less leverage, properly priced properties will still sell quickly and sometimes still have multiple offers. If we look at the graph that shows the active inventory, the sold inventory, and the pending sales, we can see that for the most part, over the past 6 months, each month, the number of sales has been trending down, and that the inventory has been trending up. You will notice that the peak of the inventory levels in the past 5 months fairly closely corresponds with when mortgage rates peaked in October of last year. As rates started to come down over the past few months, we saw an uptick in pending sales. Although the closed sales are still nowhere as many as there were before the recent rate hikes. Last fall, this short-term uptick is likely fence sitters jumping into the market due to lower rates. As we have moved into February, it appears the inventory levels are continuing to increase. By taking another look at the interest rate charts, we can see that there is a correlation between the higher inventory and the short rate increases that have happened recently. What that could mean is that the current market is very price sensitive to interest rates. The days on the market have been fairly neutral at 22 days, but this is down from last year. Another important market trend is to look at the percentage of the sales price versus the original asking price. This tells us if sellers' and buyers' expectations are matching up with one another. In January, the duplexes were selling at 94% of the original asking price. This number is just over 3% lower than last month and 3% lower than last year at this time. This could be a sign of the lower seller leverage, or simply that many sellers and listing agents are out of touch with the market. By looking at the average asking price versus the average sold price, we can see that there is currently a pretty large gap between asking prices and selling prices. we can see a downward trend in both the asking prices and the selling prices over the last 6 months or so. What has made this whole process more difficult is the increasing amount of listings on the market listed by agents who are unfamiliar with the relationship between price and income for small investment properties. In my opinion, the bottom of the market is set by comps, and the top of the market is set by cash flow potential. I often measure cash flow potential using the GRM, gross rent multiplier. This is one of the reasons that I believe the inventory has risen so much lately, because the majority of the active inventory has been priced based on sales comps. With California having rent control, we can no longer ignore the fact that if a duplex has a poor income, it will be difficult to raise rents. For those properties, the values need to be adjusted downward accordingly. Those of you already working with me have seen this in my weekly GRM reports. If inventories continue to rise, or if rates trend upward, at some point we could move towards a buyer's market. We are still a long way from that, but these trends should be watched closely over the next few months. Please feel free to reach out to me with any questions, and you can see some additional ways I can help you down below the video in the description. Thanks for watching, and I look forward to talking. Thanks for watching. I hope this talk to you soon.